Hey, it is Troy with Cornerstone Realty Associates here in Knoxville, and it is time for our monthly market update. So we are going to be going over the East Tennessee Housing Market Report for July of 2026. Today I'm going to be covering the 9 markets that we serve across the region, including Knox County, Farragut, specifically as a town, Blount County, Anderson County, Loudon County, Lenoir City, Tellico Village, Roane County, and Sevier County. We're also going to start with the national economic picture because what happened this week changes the conversation for every buyer and seller in this region. So let's jump in. Okay, so June CPI, the June Consumer Price Index, just dropped this week and the numbers were significant. Headline CPI, which is inflation, came in at 3.5% year over year, but the monthly reading was 0.4% on a seasonally adjusted basis. Now, this was the sharpest single-month decline since April of 2020, and that's a big deal. The decline was driven almost entirely by energy. Overall energy costs fell 5.7% month over month, and gasoline prices specifically dropped 9.7%. But here's the number that matters most for the housing market: core CPI, which strips out food and energy. That held at 2.6% year over year and was completely flat month over month. The headline improved dramatically, but the sticky services-driven inflation that the Fed watches most closely, it barely moved. And that brings us to the Federal Reserve. Newly appointed Chairman Kevin Warsh testified before Congress on the morning of the CPI release and made the Fed's position crystal clear. He stated that the committee has, quote, no tolerance for persistently elevated inflation and remains committed to the 2% target. He went further, saying policymakers, quote, need to choose lower prices, signaling that the Fed will keep financial conditions tight as long as necessary. But here's the important shift. The June CPI print has effectively closed the door on a rate hike at the July 29th FOMC meeting. The CME FedWatch tool now shows an 86% probability that the Fed holds rates steady. Before this report, nearly half of the committee had been projected to support raising rates later this year. That pressure is gone. However, and this is critical for anyone waiting for mortgage rates to drop, no one expects rate cuts in 2026. The Fed wants to see sustained declines in core inflation before they'll even consider easing. And the message is clear: rates are staying where they are. Okay, let's talk about oil and the geopolitical risk. Now, the wild card that could upend everything is oil prices. Brent crude surged nearly 10% in a single session after the United States reinstated a naval blockade of Iranian vessels and both nations escalated military actions near the Strait of Hormuz. Now, the wild card that could upend everything is oil prices. Brent crude surged nearly 10% in a single session after the United States reinstated a naval blockade of Iranian vessels and both nations escalated military actions near the Strait of Hormuz, which is one of the most critical shipping lanes in the world. And as of this recording, Brent is trading right around $85 per barrel and gaining another 2.5% to 3%. So why does this matter for housing? 2 reasons. First, if oil sustains above $90 a barrel, gasoline prices reverse course. And that CPI relief we just talked about, it evaporates. The rate hike conversation comes back. Second, higher oil prices directly increase construction costs. Lumber transportation, material delivery, equipment fuel, which constrains new housing supply at exactly the time we need more of it. This is the variable to watch over the next 60 days. Okay, mortgage rates. Mortgage rates tell the story in real time. The 30-year fixed rate sat at 6.64% on Friday, jumped to 6.72 on Monday, settled at 6.7 on Tuesday, and as of the recording today, Wednesday, it's at 6.64%. A modest move, but the trajectory is clear. Expect rates to trade in a band between 6.4% and 7.1% through the end of the year. This is not a waiting game, this is the operating environment. Okay, let's talk about East Tennessee. Bringing it home to East Tennessee because here's the headline that should get your attention. Despite mortgage rates hovering near 7%, every single market in this report posted year-over-year closing gains in June. Every one. Farragut surged 52.5%. Anderson County climbed 24.7%. Sevier County, the region's softest market, still posted a 21.3% growth. Buyers have adapted, and they're making decisions based on need, life circumstances, and local value, and they're not waiting for a rate cut that isn't coming. At the same time, the lock-in effect continues to strangle supply. Homeowners who locked in at 3 to 4% rates during 2020 and 2021 face $800 to $1,200 more per month in mortgage costs if they sell and buy at today's rates. That's why inventory is declining in 5 of the 9 markets, despite robust demand. So let me walk you through each market. Knox County. Let's start here. The region's anchor market. June closings rose 7.9% year over year, and year-to-date closings are tracking above 2025. The median home price is sitting in the low 400s and has been essentially flat year over year. This is a market where the constraint is inventory, not demand. Buyers are there, sellers are locked in. Looking ahead, I expect Knox County to finish 2026 with closings in the range of 7,800 to 8,200 units, a 5 to 10% increase over last year. Median prices will remain stable in the low $400,000 range, and any loosening in the lock-in effect, even modest, would unlock significant additional transaction volume in this market. Let's look within Knox County at Farragut. Farragut is the region's most competitive market, and the June numbers confirm it. Closings surged 52.5% year over year. The year-to-date absorption rate sits at just 2.44 months worth of inventory, firmly in strong seller's market territory. Inventory is declining, and the combination of top-rated schools, amenities, and lifestyle continues to drive outsized demand. If current trends hold, expect the median price in Farragut to push towards $800,000 by the fourth quarter. Buyers in Farragut should be prepared for multiple offer scenarios on well-priced properties through the summer and into fall. If you're thinking about making a move in this market, waiting is not working in your favor. Blount County. Well, Blount County continues its convergence with Knox County's pricing. The median home price has settled into the $400,000 to $430,000 range, and the absorption rate is trending below 2.75 months. This pushes Blount into a tight seller's market territory that's starting to look comparable to Farragut. The county's appeal as a Smoky Mountain adjacent market with real value compared to Sevier County continues to attract both primary residence buyers and investors. Watch the absorption rate closely. If it drops below 2.5%, we're looking at a pricing environment that strongly favors sellers through the end of the year. Anderson County. This is the region's best value story, and June painted a fascinating picture. Closings jumped 24.7% year over year, and new listings surged 33.3%, the strongest listing growth in the entire region. At a median price of $377,000, this is the most accessible market in the report. Here's what's interesting. The supply increase is being met with proportional demand growth. Prices aren't falling, they're stabilizing. If listing growth continues while demand holds, the absorption rate should drift towards 3.5 months, giving buyers a slightly more balanced negotiating environment. I expect the median to finish the year somewhere between $370,000 and $390,000. For buyers who are priced out of Knox or Blount County, Anderson County is where you should be looking. Loudon County. Loudon County is the transformation story of 2026 in this region. 12 months ago, the absorption rate in Loudon County sat at 5.07 months, a soft buyer-leaning market. Today, it's at 3.63 months. Active listings are down 15.7% year over year. This market has gone from soft to competitive in a single year. Sellers in Loudon County have their strongest positioning in over a year. Expect median prices to hold in the $580,000 to $625,000 range through the end of the year, with potential further appreciation if inventory continues its downward trajectory. The momentum has clearly shifted in this market. Now within Loudon County, let's look at Lenoir City. Lenoir City is the market I'm watching most closely right now. The median home price surged 18.88% in June, the largest percentage gain in the region, but pending sales dropped 15.4%. That's a tension that needs to resolve one way or the other. If June's price jump was driven by a cluster of higher-priced closings and a small sample, a sales mix effect, then the median will normalize back to the $490,000 to $510,000 range in the coming months. But if it reflects genuine appreciation driven by Loudon County's spillover demand, Lenoir City may be entering a new pricing tier permanently. The pending sales decline suggests some buyer resistance to the new price level. The next 2 months of data will be critical in telling us which story is real. Also in Loudon County, let's talk about Tellico Village. Tellico Village has decisively shifted into a seller's market. The absorption rate sits at 3.6 months and is trending downward. The median home price is in the $650,000 to $700,000 range, and the sale-to-list ratio is 99.8%, meaning homes are selling at virtually full asking price. Here's the key insight for Tellico Village. The retirement and second home buyer demographic that drives this community is less sensitive to mortgage rates than the broader market. Many of these buyers are paying cash or making large down payments. That insulates Tellico Village from rate volatility and gives sellers confidence to hold firm on pricing through the fall selling season. Roane County. Roane County's turnaround is one of the most dramatic shifts in this report. This was previously the region's weakest price performer, and in June it posted one of the strongest gains, up over 14% year over year to a median of $385,500. Closings rose 19.3%, pending sales increased 11.4%, and the absorption rate sits at 3.24 months. Roane County has established itself as a viable and increasingly popular alternative for buyers who are priced out of Knox, Blount, and Loudon counties. Expect the median to settle in the $350,000 to $385,000 range for the year, with the upper end more probable if current demand continues. This is a market that has earned a second look. Sevier County. Now, Sevier County remains the region's outlier, and it's a buyer's market. The supply overhang sits at 9.29 months worth of inventory, which is far too large to work through in a single selling season. The structural issue is clear. The inventory is concentrated in investment properties and former short-term rentals that don't attract the same organic primary residence demand driving the other 8 markets. There is a positive note. Closings rose 21.3% year over year in June, and the median is gradually recovering towards the $490,000 to $510,000 range. But sellers in Sevier County should continue to price aggressively and expect longer marketing times. The oil price spike adds particular risk here because higher gas prices directly impacts tourism-dependent economies and could shrink the pool of vacation property buyers. Okay, the forward outlook. Let me bring it all together with the forward outlook for the second half of 2026. Mortgage rates will trade between 6.4 and 7.1% through the end of the year. No rate cuts in 2026, so plan accordingly. Regional closings volume will moderate from June's strong numbers but remain positive through the third quarter. Seasonal cooling will temper the fourth quarter as it always does, but the floor for transaction volume is higher this year than it was last year. Prices across the region will appreciate a modest 3 to 7% year over year, with significant variation by market. Knox County stays stable, Farragut and Loudon County have the most upward pricing power, and Sevier County continues its gradual recovery from the bottom. The single most important variable for the second half is inventory. The lock-in effect will continue to suppress new listings as long as rates stay above 6%, and markets already tightening, like Farragut, Loudon County, Tellico Village, and Blount County, are likely to get even tighter through the summer. In terms of market positioning, here's how I'd categorize the 9 markets heading into the second half. The markets with the most pricing power right now are Farragut, Loudon County, and Tellico Village. Declining inventory and strong demand give sellers in these markets clear leverage. The best value for buyers is in Anderson County and Roane County. Both offer median prices well below the regional average with strong and improving market fundamentals. The markets to watch closely are Lenoir City, where we need to see whether the price surge is sustainable, and Blount County, where the absorption rate is approaching a tipping point into strong sellers territory. And Sevier County remains the lone buyer's market, with nearly 10 months of supply and structural inventory challenges that won't resolve quickly. The bottom line is this: rates near 7% are the operating reality, not a temporary condition. Every market in this report posted closing gains despite those elevated rates. Inventory constrained by the lock-in effect is a dominant force shaping prices and competition, and oil prices, driven by the Strait of Hormuz situation, are the wild card that could reshape the economic landscape in ways that ripple directly into our local markets. Buyers who accept this environment and act on their timeline will find opportunities. Sellers in tight markets hold the cards, and everyone should be watching what happens in the Middle East. Thank you for watching. This analysis is based on MLS data that I downloaded on July 13th of 2026 with macroeconomic data current as of July 14th and 15th. I'll be back next month with the updated numbers. Until then, make some informed decisions. Reach out if I can help in any way, whether it's looking at a specific property or if you have a question about the area that you live in. Feel free to reach out. I am always here to answer your questions. This is Troy Stavros with Cornerstone Realty Associates here in Knoxville.